So, all right. So when it comes to ethical and professional issues, right, there are lots that goes into it. Yes, but people only look at the ethical issues. So when it comes to ethical issues, there are four issues that mostly must come to mind. One is the integrity of client. So you can get some questions that it's the client is either trying to hide something from us, he's breaking the law, like the non-compliance I was talking about, he's trying to restrict us. All right. Anything about the integrity of client, anything regarding the trust of the client. So there was a scenario that the the guy who was working in the company, right, actually was saying something and the auditor headed that, oh, even my CV that I sent, I lied on it, right? I haven't done surgery before, but I said I did 3 surgeries and they couldn't confirm. So how would you trust such a client? You are employing surgeons and you don't check their background, right? Integrity of clients is questionable. Do you all agree?
Yes.
Yes. So when it comes to ethical issues, we have I of C, integrity of client. We have conflict of interest. So let's say that you are auditing two clients. You have recommended software to the board. Are you getting it? Let's say MTN is your client. Tigo is your client. You know these people are competitors. Are you getting it? This is a conflict of interest. So anything that can lead to a conflict of interest. Sometimes even loans to and from the client can create a conflict of interest scenario. Are you getting it? Then confidentiality issues. So I'll come and talk about when to actually what? Breach confidentiality. When do you actually have to disclose? So the rule for an auditor under the IESBA framework is that you have two circumstances which you have to disclose information. Those that are voluntary, but maybe it is legal or you have a legal or professional right to do so, and those that are compulsory. So if you see serious breach of the law, like tax evasion, you see money laundering, you see drug trafficking, sex trade, treason. When we talk about treason, somebody has betrayed his nation, maybe defense information, you sold it to another country. Are you getting it? Something like this, yes, you have to what, disclose it. It is compulsory or mandatory disclosure. Okay. Okay. Then non voluntary disclosure is when something is of public interest. You think you can disclose it or you've asked permission from the client, right? Apart from even asking permission from the client, when there's a legal and professional right to do so, are you getting it? Yes. But compulsory also includes what? Maybe there's a regulatory requirement. Like ICA requires you to disclose, you will disclose. When there's a court order, you must disclose. This is the only time you actually breach confidentiality. Are we okay? So when it comes to ethical issues, you are looking for four things: integrity of the client, conflict of interest, confidentiality, which I was talking about when to disclose. That's where mostly most questions focus on. And the risk to the auditor's independence. You realize I use the word what? Risk. So the risk is also the ethical issues, the threats. Okay, and you can use massive or Safim or MIFAS, everybody in his own. I get it. So you have what self-interest threats. So when we talk about self-interest, think about anything that can benefit the auditor. So gift, financial interest, business opportunity, loans to and from the client, something that will give the auditor some sort of benefit. Right? There was a case where the auditor fell in love with the MD, right? So that is a self-interest trait. Self-review is when you are seen to be checking your own work. Okay. So one, checking your own work, like providing non-audit services to an audit client, which impacts the financial statement at the end of the day. You are checking your own work. If you are the one who prepared the accounts for the client and you are the same person checking the accounts, right? This is just the basics. But when you recommend the software you are using, how can you spot errors in that software? Do you get the idea? So if you are doing internal control systems for a client, for instance, right? You doing internal control systems for the client. What happens then? You are the same person going to check the account. What if you did something wrong? How can you see that? Advocacy is where you are seen to be supporting the client, right? You are promoting the position of the client. So, how do you promote the position of the client? So, the client has a court case, you are defending the client, you are negotiating on behalf of the client, you are guaranteeing something from a client. How would people trust your opinion? Because audit is all about trusting your opinion. So, if you are doing these things on behalf of the client, how would we trust what you are doing? Then familiarity trait is also there. So this is where you either have long service or you have a relationship with the client, right? Or maybe close family and friendships, right? Long association with somebody, close family members, and the rest. Then intimidation is pressure, simply pressure, fee pressure, intimidation to sue, undue influence over somebody. Somebody's blackmailing you. You can see this in scenarios, right? Threat, a gun to your head, all these are intimidation. Then we have management threat and management pressure. Sometimes management can give you a pressure, especially if this is your first time audit or this is your first time client. So I'm giving you tricks. So if this is your first time client, automatically you know you might be intimidated because you need money. You have started your business. This is your first time client. Hooray. Um, hmm. To break that person's trust by their bedding. True or false? True or false?
True, pa.
If this is your first
True.
time client, are you sure? Are you sure you can easily spot something else? You want to create first impression, and
Yes.
so there's a chance that like you are going to ignore some things just so you can keep going with this person, right? Unlike a long time client, yes. So when it comes to ethical issues, I said four areas or four issues. What are they? Integrity of client, conflict of interest, confidentiality, and then what? The
Risk to
risk
the
to the
audit
auditor's independence, or what we call
independent.
the ethical traits. Do you understand? So what do you look out for? I of C, C of I, confidentiality, and then what? The threat to the auditor's independence. Well, I prefer the word risk, not threats. Do you understand? And there's a reason why. I'll come and show you. Now, that is ethical issues. All right. And all these issues, you must always tell us the principle that is be breached. Are you getting? Which a lot of students actually forget. Don't worry. The examiner loves conclusions a lot. If you don't know, I'm telling you. Most of you who don't like concluding. Ah. So let's come to professional issues. So ethical issues, how many areas were there? Ethical issues, how many areas were there?
Oh, four.
Four. Always have this in mind. Four. 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 And what are the four?
Integrity.
Integrity of who?
The client.
The client. And what are some of the things that can cause integrity issues? I told you. What are some of them? The client is restricting you. The client is hiding something. Also, the client is breaching a law. Do you understand?
Okay.
Yes. So that's the person doesn't have integrity. What will cause you not to trust the client so that you can increase professional skepticism? The areas that I told to write, I told you to write, please, I forgot professional skepticism. Please write it down. Please add it. Professional skepticism. Those who were not here, please, someone should mention the areas I told you that you should pay close attention to.
Audit, ethics and professional issues.
Ethics and professional issues.
Audit risk.
Audit risk.
Matters and evidence.
Matters and evidence.
Audit reporting.
Audit reporting.
Group audit.
Group audit.
Public sector audit.
Public sector audit.
And then the professional skepticism.
Professional skepticism. The audit reporting, within that there are two sides of it, right? So you can have review procedures. So going concern and subsequent events. You can separate that one because that one as a theory, like always when you have that one, you definitely go and meet it there. So there are some topics. If you learn them, well, yeah, then you meet it. Do you understand? So, for instance, if this is your first audit, definitely you don't know the client. So, opening balances, you need to audit them. So, auditing of opening balances and previous year's account. Do you understand? Always too, when you are auditing somebody, there will be estimates. Are you sure about those estimates? Were they done right? So, auditing of estimates. You get the idea. There are some things you can't do away with it as a student. And I wonder why people don't learn those ones rather. They rather go and learn the things that are so complex, and the ones that they need, they rather leave it. Okay, so that was it, by the way. Let's come to professional issues. Professional issues too, we are looking at four issues. I said we are looking at what?
Four issues. Four issues.
Mhm. Well, what are the 4 issues we can look at under professional issues? So we have 1, money laundering clues. So if you spot any issues around money laundering, that's why I'm saying these areas, anytime they say ethics and professional issues, these areas can come out. So 1, you have what? Money
Is it
laundering clues.
same as the professional consideration?
Yes, of course. So if I say professional issues, I mean professional considerations, things you must consider professionally.
Okay.
Are we okay? So money laundering clues, we have audit liability. Is there anything that can make us become sued? We have practice management, which includes quality control, and then we have impact on audit work. Do you understand?
Okay.
I gave you 4 areas. What are they? I heard professional issues. What are they? What is there? Money
Money
laundering.
laundering.
Money laundering clues. If you spot money laundering clues, they are having excessive cash, magic cash. They are cash-based business. Then you know that cash-based business is difficult to track transactions, right? So it's a clue for money laundering. Liability of our firm, right? What can make us become sued? Can we easily be sued? And even if we have a case, do we settle in court or out of court? What are some of the things to secure our liability to make sure we are not sued? Then you must understand quality control. Quality control is is one of the things that usually people usually don't really get very well, right? And that comes with what? Managing your audit practice. So we have quality control within the firm or at the firm level and quality control on an individual assignment level. You understand? Then from there, within your audit practice, you also advertise. Have you ever seen auditors advertising on TV or social media before? No, they have a way they do their advert. Do you get the idea? So audit advertisement is also part of ethics. So if you spot that, then tendering. Sometimes you have to what? Tender for work. So what goes into your audit tender? That thing too, you have to know it, right? Then the impact on the audit work. So are you going to extend your audit procedures because they didn't have proper controls, or there's more stress on their going concern work, or you need an expert? This is the part of ethics that students don't even know. They don't know this part is part of ethics. So it's there. And I will prove to you when we are solving questions. Do you get it? Then finally, safeguards. I said finally what? Safeguards. Are you going to use separate audit teams? Are you going to resign from the audit work because your wife is the MD? Are you going to inform the client? Are you going to do a hot review, especially under quality control? Are you going to decline the audit work? Do you need legal opinion? Do you need expert review? Do you need to resign and sign a business deal? Do you need to do code reviews? Do you need training, especially when it's a competence issue? Do you have to attend a CPD? So, for instance, when we talk about audit safeguards or safeguards in ethics, we have those that come from the profession itself. ICA also has safeguards. What are they? They offer CPDs, they offer training, they check us, right? They can take your professional certificate, they do reviews. Do you get the idea? They conduct regular exams. All these things are what? Checks from the profession itself. Then we have checks from the organization, having proper internal controls, having internal audit, corporate governance. Do you understand? So these ones are from the client itself, like within the work environment. These are safeguards, right? Then we have safeguards on individual assignment, like proper supervision, proper checks, proper planning, proper monitoring, making sure junior staff do not do what senior staff are supposed to do. Are you getting it? Avoiding tipping off the client when you spot money laundering clues and all that. Are you getting it? So anytime you are doing ethics, right? I want you to remember Sister Iwa. What did I say?
Sister Ira.
What is Sister Iwa? One, what is the issue? Why is it an issue? And what action can be taken? And this action is what we call the safeguard. Are you getting the whole approach? Are you getting the whole approach?
Yes.
Good. So you can put this model down. So anytime you are dealing, there are so many models, but here I prefer you always use Iowa. So anytime you spot an issue, please don't go separating them into professional and ethical. If they ask you, it can confuse you, right? So if you spot the issue, just write it down. All they need is that the issue was identified. Don't go separating it. I'm just giving you the clue that this money laundering, liability, all those things goes there. Yes, fine. But let's say you've gone to the exam, you've seen some issue that you think, this one is a professional issue. Don't think about classifying it. It will waste your time. Just write it, underline, and explain. Do you understand? So usually for all scenario questions, whether audit or case study, whatever, you always use Uncle P. So one, what is the point? That's the heading. You write the heading nicely. What's the explanation, right? If there's any theory around that thing, you explain, then finally evidence. So you link to the case. Okay, so this is the rule for every um theoretical paper or like a scenario-based question. And that's why I say use Iowa. Iowa is Uncle P's wife. Okay, they've been married for 30 years now. So what happens is that once you write your heading, let's say integrity of client, you can say what? Integrity of client involves what? When the client has trust issues, right? Simple. Then you come and say from the case, the client has been is restricting the auditors from knowing the source of their funds. And this could constitute what? An integrity issue. So we have to be careful when we are auditing such a person because proper know your client procedure should have been done or something, which causes an issue whether we should decline from the audit or something. So you see, we've seen the issue, but why is that an issue? That's why you have said it. Then the action. Should you decline the audit? If you can't trust somebody, can you audit him? Should you take up the assignment?
Mm.
So you see, integrity of client is the first area. That's why I put it first. Why? Because with this one, the person has integrity issues. Then we shouldn't even go ahead. Straightforward, you should resign. Like this one is not even resign. There's something like cease work or stop work. This one, we will not even take up the work at all because the person doesn't have integrity. And you have no. And sana issues already from the get go. We can't trust the person. Do you get the whole idea?
Mhm.
So I've given you 8 areas. Please don't forget them all. Don't forget them. So let's now dive deeper into each of them. I hope you wrote them down.
Yes.
Good. So let's see. 1, integrity of client. When do you spot it? So let's say the client is what? Restricting access to your records, his records. They're hiding information. Maybe they are breaching laws and regulations, or you are seeing fraud and error, or they have disputes with the previous auditor. Do you understand?
Mhm.
Are you listening?
Yes, sir.
Me, I prefer you get the technique or forget past questions. What the technique? And I said, there's no question that can beat you. And this is what I think people don't spend time understanding. They just straightforward and audit is that. No, listen. So how do we write it in exam? I realize that that's also another problem students have. They can't write it well. Like they know the thing, oh, but how to express themselves, they are not getting it. Anamebwa. Oh, be
Yeah,
honest.
Pepe.
Yeah, mo nim the way I'm better no, but mo te ase, because every case is different. Let me show you something. So, for instance, let's say you spot that the client is restricting you to relevant information. What do you say? So you can say the client actions indicate a lack of integrity. As management is restricting the auditor's access to relevant information, this raises concerns over whether sufficient appropriate evidence can be obtained and increases the risk of material misstatement. Hence, the client lacks integrity. Do you understand? So when you're evaluating this what do we call it? Integrity of client. 1, if it is very serious, can it affect audit evidence? Yes, like this one. If you are restricting me from what? Collecting the evidence, wouldn't it affect audit evidence? It will.
Mhm.
If management is involved, then it's more significant and it may indicate fraud or money laundering. You have to state it. So this is the end result. Do you understand? So you can say that after you end this, you can say this is very serious because it affects audit evidence and this can impact the audit heavily. This is even more significant if management is involved. The auditor can take a critical look and even decline the audit. This may therefore lead to fraud or money laundering because of what you think they are doing. They lack integrity. So, what is the action? Possibly discuss with those charged with governance. Consider scope limitation or a modified opinion later, or decline the audit or resign. So you see how I breach this thing out. Please, did it make sense? This is what I want you to get. The technique. Technique ni hear me. Forget the questions. This thing, if you get it, then I'm comfortable that any question that you can get when you spot this, you won't. Most people never talk about this. All they are concerned about is, oh, this one is self-interest, this one is self-review. No, 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 no. This aspect is always mostly hidden in most questions that majority of people never write it. Is it clear?
Yes.
Did we learn something?
Yes.
Yes. When they hear me, if you can get this, Charlie, I know that you guys, you are top notch, like you are auditing professors now.
Mm.
All right. So, any question, please keep the questions coming. That's what I did for you. I did for you. So, keep the questions coming. Can we go to the next area? We know we have 4 issues. So, I've given you area 1. Is everybody fine with integrity of client? We know what goes there. So, remember, they are restricting you, they are hiding information, they are breaching laws and regulations, fraud and error issues, or they had disputes with the previous auditor. So these are the things that when you see, you know that this person has trust issues. Why would he have disputes with the previous auditor when auditors are considered independent? Do you understand? And I gave you how to what? Give you. So these are some of the vocabulary you can adopt, right? Indicates lack of integrity as they are doing this. Okay, so the client's actions indicate lack of integrity because they are hiding so and so from us, because they are breaching laws and regulations, because you think they have disputes with the previous auditor. And this is very serious because it affects the audit, impacts the audit heavily. It is significant because you think management is involved. This issue may indicate fraud or money laundering issues and will require a critical look. You get it? Use your brofo. Hmm? Can we move to the next one? And what are some of the actions I suggested? What are some of the actions I suggested?
For
For this, if you spot this, discuss with those charged with governance.
um
Consider limitation of scope or a modified opinion. You can decline the audit or resign from the audit if you have already started. Is it clear?
yes.
So the next area is conflict of interest. So typical scenarios when you see 2 competing audit clients, like you are auditing MTN, you are auditing Telecel, or if you have software or system recommendations, or you are acting for a buyer and a seller at the same time. So you are auditing the buyer and then you are auditing the seller to one transaction. So usually some of the ways we do this, we use Chinese wall. If we think that these people, we talk to them and they understand, then we use separate teams so that there will not be information leakage. Do you understand? Because it is
Mm.
very crucial. Because I may be auditing MTN, I'll see something. If I have similar teams, they can leak information. So you make sure you use separate teams. So how do you score marks for something like this? Because it will create conflict of interest. So if you're writing an exam, you say what? This creates a conflict of interest as the firm's objectivity may be compromised when acting for competing clients, particularly if confidential information obtained from one client could benefit the other. You see how I wrote the answer there? This is actually an answer for the exam. So always when I'm teaching this kind of things, I teach you how to also write your answer because I realize that's the problem students have. Yes, they know the thing, but how to express themselves, they usually have a problem with that. You get it? Usually I type it out, but because this is morning, like people go to work, that's why I've laid this out. But I hope this is not so bad.
No.
Good. So always these create integrity problems. These create objectivity issues. These create this. So as I told you, what are some of the safeguards for conflict of interest? Using separate teams or information barriers, making sure the 2 clients have consented. But if you think it's very significant, just decline the engagement, right? Not all of them. You can. So you actually in the IESBA framework, we have 3 options available to us. You can advise only one client. You can decline the engagement, or act for both of them. So you can act for no one, act for only one, or act for both of them. If only you have obtained their consent, then you use what separate teams. We call that the Chinese wall principle. What did I say? We call it what?
The Chinese wall principle.
Yes, you use a Chinese wall such that the person at the other side cannot see what is going on here, right? A complete wall, separate teams, information barriers, so that things do not flow. Are you getting it? So, and the ethical issues, you've seen two issues now. And what are they?
Conflict of interest.
And
integrity of the client.
and integrity of the client. Thank you. And you've seen how to actually write it in exam, right?
Yes, sir.
Good. Now, the third area before I come to the ethical issues themselves, the ethical threat, sorry, is confidentiality. So I told you confidentiality, we have what two cases. We have mandatory disclosure, okay? And we have what? Voluntary disclosure. So, under what circumstances do you have to breach confidentiality? I call it breaching confidentiality. You know, you have the duty of confidentiality, right? But when do you have to breach confidentiality? So, we have the first one, which is most important. When you have asked permission from the client, because we said you shouldn't disclose information without proper permission. So, if you have asked permission from the client, then fine, you can disclose too. If the thing is of public interest, you feel like you are auditing a bottling company, right? And they are using a poisonous something, even if it's not poisonous, but you feel that this is something the public must know. Three, let's say that you have a legal or professional right to do so, right? We call it professional blackmail. So the person wants to sue you, but you have information about him that you feel it must come on board. Wait me disclose it. And what else? Basically, yes. This is what you put there. The mandatory when it is required by a court order. Please, these things write it down. It's very important. You usually don't see it in books. That's why I'm giving it to you. So court order, if it's by a court order, if it's required by a regulator or a profession, like ICA requires you to disclose, right? So you can put that there. Also, we have yes, something like money laundry. You spot the client is into money laundry. Are you getting it? The client is into money laundry. Uh, client is into money laundry, treason, that's betraying your nation, right? Selling defense information and special, like secret information about your country, terrorism. See, the person is into terrorism financing, drug trafficking, okay, tax evasion. You can see all these things. You are required to disclose them. Okay, so if you see the person doing illegal acts, money laundering, I get a court orders. Are you getting it? Are we there? Are you done?
Yeah.
Okay. So what's the golden line when it comes to confidentiality issues? So while the auditor has the duty of confidentiality, this does not apply where there's a legal or professional duty to disclose, such as under anti-money laundering regulations, right? So if there's a legal or professional right to disclose, you don't have a say. Like anti-money laundering legislation, can you say that, oh, the client, I have confidentiality to my client, so I won't tell you? Oh boy. The law says disclose when you see money laundering. Say clients, you have confidentiality. This thing, confidentiality to your client, so you can't disclose. Who tell you? So always mention in the case. That's why I've put this there, right? Always mention. No tipping off. Tipping off is when you make it obvious for the person to see. Don't make it obvious. Like you spot something, sometimes you have to hide. Sometimes you can report to the money laundering reporting officer, like and money laundering regulations, and follow the legal process. Always include this thing. It scores a lot of marks. So he said, though you spotted this, you have a duty disclose, but always follow the legal process. If you feel you are stuck in a dilemma, seek legal advice. It always wins marks. I said seek what?
Legal advice.
If it's not legal advice, you can use professional advice. So let's say you are doing ethics, you are stuck, you don't know the action or the safeguard. You remember Sister Iwa? What is Sister Iwa?
The issue.
Why is it an issue? Why is it an issue? And the action. So if the action you don't know what to say, all you can say is seek legal advice or seek professional advice. That's all. And that's a good safeguard. Is that okay? Are we okay with confidentiality?
Yes, sir.
Good. So this most of the exam, like the exam questions, this is where most of them come from, the high yield areas, right? So independence threats. So you can use the word massive or Safim, Mifas, everybody on his own. I mean, I use all of them anyway. So massive, because it's something like you are using, it relates to the word massive. So massive is we have management threat, or some people say management pressure. We have advocacy, self-interest, self-review, intimidation, and familiarity. So the trick here is this. Let me show you something. We have 5 fundamental principles. True or false? Can somebody mention them? 5 fundamental principles of ethics. What are they?
Integrity.
Okay. Yeah.
So you always remember Dr. Pico. What did I say?
Dr. Pico.
Dr. Pico. So Pico, professional behavior, integrity, confidentiality, competence, and due care and objectivity. Now, anytime you hear the word independence, people have been hearing independence, threat to independence, threat to objectivity, threat to integrity. And it's like, which is which? Is it threat to independence? Is it threat to objectivity? Is it threat to integrity? Actually, in accounting or in finance, when you hear the word independence, it is integrity plus what? Objectivity. What did I say?
Integrity plus objective.
That is why you see they can say threats to objectivity or threats to integrity or threat to independence. Anytime somebody is independent, it means that person is honest and that person is objective. Do you understand? So anytime you hear the word independence, it means that one, the person has integrity and the person is what? Objective. Makes sense. Good. So anytime you are talking about any threat and you don't relate it to the professional fundamental characteristic that has been breached, you lose marks. That's what people don't know. You lose marks because if you are telling us that, oh, the guy maybe has undue dependence on a client, right? His whole revenue, more than 15% of his revenue comes from one client. Okay, that is a self-interest trait. Good. You have told us the why. It's a self-interest trait. But then, what principle is being breached? Objectivity. Do you get the idea? Do you get the idea? So always the principle is what you used to know. So I told you always there are two things. It's either somebody did something intentionally or somebody did something what unintentionally. Do you understand? If somebody does something intentionally, then he did it. So he's trying to either hide something from you or he's not being objective. So anytime somebody does something intentionally, it's a breach of what? Independence. So it's a breach of what? Either objectivity or what? Integrity. Do you understand? Does it
Yes,
make
sir.
sense? Yeah, so
Mm.
breach of objectivity and integrity means the person did it intentionally. And what would cause breach of objectivity and integrity? That's when your massive will come in. Do you understand? Why do you think he breached that? That's where the massive will come in. If he did it unintentionally, that means it's a breach in competence and what? Competence and what? Due care. Because unintentional. Why you, an accountant that we have employed, you said it was unintentional. You made a mistake. How could you make a mistake? It means you either didn't know or you were rushing.
Yes, sir.
And this one, why would you rush? Meaning you may face a problem called traits. You see, I like using mnemonics a lot. You face a problem called trait. What is trait? Why would you unintentionally make a mistake? It's either you lack proper training, you lack proper resources, you lack proper information, or you lack time. That is why you were rushing. So anytime it's a competence and due care issue, then it's because you didn't have there was inadequate training, inadequate resources, or insufficient time, or insufficient information. You see how these things are. But these are the aspects that students never talk about. So their answers are always limited. If it's 20, you are marked over 10 instead of even 15. Do you get the idea? So, one, learn how to talk about the fundamental principles and how a particular threat has breached those fundamental principles. Right? For instance, if you are answering the question, you can say what? This creates a risk that the auditor's judgment may be biased due to personal financial benefit. I get it. This may make the auditor ignore that particular word risk. I get it because he wants to enjoy this benefit. Are you getting it? So there's self-review trade, gift fees, loans, contingent fees, and the rest, right? I know you know a lot of them. So when you see non-audit services like valuations, are you getting it? Internal controls, software recommendations, and all that, right? When you are doing what? Direct documentation for clients and all that, right? So remember those things. So it is particularly significant where the work relates to material balances later audited, things that will be later audited,
Yeah.
meaning you end up checking your own work. So for listed or public interest entities, these are often prohibited because one, you can't do that for a client, and safeguards may be insufficient, right? Then advocacy is when you end up promoting the position of the client. People will not trust your position, right? So when you are negotiating with the banks, you are promoting the client's interest. So you may be perceived as supporting management position, which can undermine your objectivity. Do you all agree?
Yes, sir.
Good, good. So today, let's get the basis. Then let's move to familiarity. So when you have long association, family relationship, close relationship, especially in audit questions, you see that you've been auditing the client for 8 years. You have to audit the client for 7 years for rotation, right? So it depends. Do you understand? When you see this, don't keep quiet. When you see that your uncle is the managing director or the board chairman, this can impact your audit. Do you understand? So this one may make you not be skeptical because it's family. You understand? Your wife is the MD. You are going to audit that company. You should drop off the audit. Intimidation, when there's fee pressure, they don't want to pay previous fees, right? You took a loan from the client. Some threats can be here and be there. It doesn't matter where you put it, but talk about it. If you can even talk about the two, why not? So, for instance, if you give a loan to a client, do you understand? One, there's intimidation there. You are scared that if you don't do the work the way the client wants it, he will not pay you. Two, self-interest rate is also there. You want your money. Make sense? Does it make sense? So also when there's stress to sue or replace you, especially when this is your first audit, you'll be scared. It's intimidation. When somebody's trying to blackmail you, when there's duress or undue influence, maybe your chairman that has been giving you small tips, he's the person whose wife you are auditing. You feel threatened. True or false?
True.
Yeah, so this may lead to reduced audit quality just to retain the client. So always I'm just giving you tricks about how to write. Like, what do you write when you spot it? Do you get it? This may lead to risk of reduced professional skepticism. Now, this may lead to reduced audit quality to retain the client. Management pressure, when there are tight deadlines, unrealistic expectations, maybe they want to go for this. Are you getting it? So this would threaten your due care and compliance with auditing standards. But apart from that, we have what we call management traits, where you see the auditor giving strategy to the client, especially when you have secondment to a firm or secondment to a client. So you are the auditor, maybe the CEO got sick and they told you to come and act for the CEO for some time, okay, or they second you to a client, okay. Now, what does that do? You are acting like management. It's a management trait. Auditors are not supposed to act for the client in that capacity. When you see that, you must decline that engagement or use a separate team. Do you understand? Is it clear?
Yes, sir.
Good. Now, when it comes to professional issues, okay, there are easy marks if it's done properly. I told you in exam, don't separate them into professional and ethical issues. So first you spot the issue, underline it and write. Do you understand? So money laundering is where it can just come on its own as a question, like money laundering on its own. Are you getting it? Now, Always structure it like this. The indicators. So if you see the indicators, the person is having excessive cash, magic cash. We don't know where the cash is coming from. They are unusual transactions. Maybe you are reading the question, you saw that the person has multiple bank accounts, right? Apart from the multiple bank account, he has a lot of what? Cash transactions. There was a case, Look, sometimes you have to do some calculations. There's a gym. Let's see. There's a gym that opened this year. They don't have cash from anywhere. The gym has 50 members, right? And each member pays 1,000 cedis per month. Now, how much do you think their revenue will be? Multiply and let's check something. 50 by 1,000 by 12 months in a year. That's how much?
600,000.
Okay, so they should be the annual revenue. Assuming they didn't have any other income, they should be the receipts, right? Good. Now, you check their accounts and you realize that they have 50 million Ghana cedis. What are you saying? What could be the possible indicator? This is the first year you started business. You don't have any income source anywhere. Could this money come from the gym? Oh, I'm only hearing from a few people, and we are about 7 on the call.
No.
Why?
There's been an
The difference is
There could be a possible money laundry issue. So money laundry is just washing dirty money clean. That is it. So always spot money laundry issues, excessive cash, magic cash. This is magic cash. Where did it come from? It can even, I told you, money laundry also has integrity of clients there, right? The client may lack integrity. I told you. So you can still talk about that, right? If you see cash-based business, because cash transactions can be difficult, it can be trace difficult. There's difficulty in tracing, right? What do I mean? Let's say I'm teaching you, right? If I'm under a tuition center and I teach you and I take cash, so far as I didn't record it, how would you know that I taught you for extra cash? Do you understand? This is the reason why cash-based businesses are prone to money laundering. Then you must know the stages in money laundering, right? There are 3 stages, right? And you must mention them briefly when you're answering such questions. Sometimes they will even bring a stage in the transaction. Then you tell us. For instance, if the person makes frequent deposit into bank accounts, or he's doing frequent deposit, that's placement. He's placing it into the financial system. Are you getting it? So that's what we call placement. Then layering is where he tries to create a layer of transactions, a trail of transactions. We call it audit trail. So he'll put in this bank account, transfer here, transfer to Zimbabwe, transfer to Mauritius, then finally give to his brother. Then his brother brings it to Ghana. You see what he's doing? You see what he's doing? This is what we call layering. He's creating layer of transactions. Then from there, he integrates it into the financial system. So now that money that gave to his brother will now bring it to Ghana and put all the money in my bet. Do you get it? Then he will bet 50% of the money on one team and bet the rest on another team. So you see, because he has split it, he will win with the 50% and get legitimate money. Then that legitimate money, you use it to come and buy a filling station. You see how you watch the dirty money clean? Did you see the style? So what did he do? He has finally integrated it into the system. That's what we call integration. So you place it into the financial system, you create a layer of transactions so that we cannot spot the source, then you integrate it into the financial system or the system in the country you want to go to. Does it make sense? Hello?
yes, sir.
Yeah.
Yes, sir.
So did you get the process of money laundering? So to catch a thief, you must first be a thief. So you place it through the financial system. So that's where you check first. You create a layer of transactions, then you integrate it into the economic system. Good. So what are some of the auditor's responsibility when you spot money laundering? You must have, there are a lot of them. I'm only suggesting a few, right? There are a lot of them. So it will just prompt you to go and read more because I'm giving you the technique. I get it. That's why I'm doing them in summary. There's a whole chapter. So proper KYC. When we say proper KYC, you know, proper know your client procedures. Check the ethics of the client. Report to the money laundering reporting officer. You must always have a money laundering reporting officer, which you report money laundering issues. Avoid tipping off. When we say tipping off, I explained it the last time, right? Remember earlier. Then you must have firm-wide anti-money laundering controls, proper training of your staff to spot money laundering, right? Even your employment, you must employ staff who don't talk cha 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 cha. There are some people that talk too much. Okay, so all these things also link to quality control, right? Proper employment of staff, HR responsibilities, right? Setting the tone at the audit firm itself is part of money laundering rules, because money laundering, there's an anti-money laundering legislation. So you must make sure that your client, like your staff, are properly trained for that role. Do you understand? So that when they spot such things, they don't panic. They report to the the money laundering reporting officer. They should avoid tipping off the person. Okay, you go and say it. Look, if the person is involved in the thing and you go and say it, he might hide it. True or false? Or he might threaten you. Meboa. True or false?
True.
Yeah. So you must set firm-wide anti-money laundering controls. Then auditor's liability. We say auditor's liability is when what? You will end up being sued. So you must remember that as an auditor, even if you spot money laundering, it will be a crime. You can still be sued under money laundering. What? It will be a criminal offense if you fail to report the money laundering, if you tip off the client, or when you conceal proceed. So the person has done bargain with you, Charlie, I'll give you $200 million. So, bro, if you keep quiet, this one nobody will know. They're not gonna know. You understand? So these things can make you sue. They can even take your license from you. Okay, so sometimes you can even shape in consequences of unethical behavior in such effect, depending on the marks as like allocated to the questions. Nowadays they make it 10 marks, 10 marks. So you don't have to go too much into detail, but at least spot the issues when you see it. Don't keep blind. The whole thing about professional and ethical issues is don't keep quiet. You spot the issues, over bustle. That's all. So the next thing was auditor's liability itself, right? You mentioned it where relevant. So they gave a wrong audit opinion, inappropriate advice, reliance by third party. So the whole thing is two. So we actually have what we call civil liability. That is between the auditor and a third party. So it could be the auditor versus the client. So the client has sued you because maybe you gave a wrong audit opinion, you didn't give him proper advice. I get it, or somebody's relying on your opinion. Do you understand? We have what we call criminal liability. So criminal liability is example of what we saw at the top there. Criminal liability is between the auditor and a third party, right? And this one, the simple trick in exam is to say that we need proof. And this one, mostly we call it, hey, I said auditor versus third party, sorry. Criminal liability is auditor versus the state. I was supposed to talk about negligence. So auditor versus the state versus the attorney general. So this one, when you spot it, there's a criminal issue. Let's say they concealed money laundering proceeds, and then the government has held you. Are you getting it? They are going to jail you. So this one is auditor versus the state, right? Then we have liability of tort, or simply negligence, when the auditor has been negligent. Do you understand? So when the auditor has been negligent, then we are looking at the auditor versus what? A third party. So auditor versus third party, this is what we mean. You gave an advice, a third party used the advice, and maybe he suffered losses. Are you getting it? So it needs proof. The person must prove whether you owed him a duty of care. So there are three things that must be proved. One, the client or the third party you owed what? A duty of care to that third party. That duty has been breached. And then the person suffered what? Losses. Does it make sense? And this thing, you must always state it when it comes to liability regarding third parties. So, Mr. Anku said that you said that men's gold is a suitable option and he went to invest in men's gold. Now he has lost his money. First of all, the first question you ask yourself, did you owe Mr. Anku any duty of care? That's the first question. Two, was the duty breached? Three, Did Mr. Anku suffer losses? If he did, then you have been negligent. You can be sued. And even if you are sued, you can claim for out of court settlement because that one will save you face. In court settlement is a bad option. In case you spot a case where the auditor already has a case, you can plead for out of court settlement. Does that make sense? So that you save your integrity. Hello, are we learning something?
Yes.
Are you sure you are
Yes, sir.
getting it? Please ask questions.
Yes.
So that's why I'm here for you. Are you sure you are getting it? Or I'm going too
Yes.
deep? If I'm going too deep, tell me so that I don't sink you in the sea. Yeah, together.
I have some questions on the, maybe when we are done, the acronyms that you've given.
Okay.
The
What question?
massive, the to fill in the pots, I was confused. The massive, the pick, Dr. Pico, and then the trait.
Okay. The massive, the pico, the trait.
Yes.
Okay. So massive is the threats. Pico is the fundamental principles. Trait is the breach. I get it. Or the things that will not make you competent. Okay.
Okay.
The things that will not make you competent. So we are saying massive management trait, advocacy trait, self-interest, self-review, intimidation, familiarity. Are we okay? Pico,
Okay.
professional behavior, integrity, confidentiality, competence, and due care objectivity. Trait, lack of time, lack of resources, lack of information, lack of training, or inadequate training. Are we okay? That is, if
Okay.
these things happen, then it's a breach of competence and due care. Is that okay?
All right.
All
Thank
right,
you.
that's fine. But I hope I'm not going too much into detail. You guys are fine.
Yeah. Okay.
Good. Okay. So I told you that liability always what? Look for out of court settlement. If the liability is there. Are we okay? Good. So sometimes you may face legal liability if you fail to exercise reasonable skill and care, especially when you have competence issues. It links directly to audit liability. So you must say you will be sued because you acted rashly. Are you getting it? So mostly I told you most of these cases will be around either criminal liability, civil liability, and then what? Negligence. And mostly negligence, where you have to what? Prove. And I told you what are the three things you must prove when it comes to negligence. What are the three things that need proof?
Yeah, the negligence.
I just said it all.
If you
You are
owe
not
it,
listening to what I said. You owe the person a duty of care.
Duty of care.
That duty
The
has
breach.
been breached. As a result, the person suffered damages or he suffered losses. Do you get it? If this can be proved, then you truly have been negligent. Do you understand? And between in court and out of court settlement, which one must you always go for?
Out of
out
court.
of court.
Yes, so that you can save face. Do you understand? So sometimes one thing is that even if you give a disclaimer, it cannot exclude what? Negligence, right? So auditors can give disclaimers. That's the way to, do you get it? So we have limited liability caps, which are disclaimers that in case this happens, I cannot be sued. But in terms of negligence, you can never have a disclaimer because you have been negligent. In fraud cases, disclaimers are also what? Limited. You can't use disclaimers because it's fraud, right? Why did you use disclaimer? Do you understand? So also look for ways to check it, right? Sometimes doing proper audit work is one of the ways to avoid liability. I get it. Using disclaimers is one of the ways to avoid liability. Proper quality control is a way to avoid liability. I get it. So there are so many ways to avoid liabilities, and I know you guys know it. Some of these things I won't worry myself because you know how to do it. Now, the area that I think people have a problem It's mostly practice management and quality control. It's part of ethics. So you see that every time you take your ICA question 2 in the new syllabus, mostly when you take question 2, or even question 1, sorry, question 1A and B is where you have ethics. A, B, it dwindles between acceptance, professional acceptance, and qualification of auditors, like the regulatory framework, right? The Companies Act. Please, that part too, you have to go and look at it. When auditors, you can decline auditors, when you can accept auditors, when auditors can resign, the role of auditors, you get it, those kind of things in the Companies Act. When to remove auditors, when to accept auditors. Do you get it? That thing is part of the ethics, it's the regulatory framework. Okay? So nowadays, if you like go and check the past questions, you see that that area always pops up. It's either between question 1A or question 1B. Okay? Is it clear?
Yes.
Please, I hope we won't forget to.
This, this, will we get a recorded version so that we can
This
go
one,
back
oh
to it?
yes, it will be put on YouTube. And make sure you watch the previous one on matters and evidence. I covered everything you need on a matters and evidence question, right? This is like the second meeting, like the second part.
Okay. This is my first time.
No problem. I did for you. You don't get fear. So, my job is to make sure you really understand the principles behind it so that no matter the question you get, you can get decent marks. Do you get it? It's not about just jumping into questions without you understanding the principles. So, even if we don't solve any question, I'm still sure at least you have the fundamentals. Do you get it? So that next time when we meet and we are solving questions, like you are good to go. So, I'll come and show you something right now. So, let's go. So, usually, when it comes to quality control, you are looking at what? The standard on quality control, ISQC 1 and ISA 220. So here, when you see quality control, you don't list. Quality control comes from two perspectives, from the firm level, two levels, sorry, from the firm level and from individual assignments. Do you get it? So quality actually starts from the firm level. So let me explain something to you. You always ask this, where did quality fail in the scenario? Where did quality what? Where did quality what? Fail in the scenario. So always you open your eyes, and this that you get a question like that. Are we okay? So you will see that the audit senior, the audit manager didn't even come to the client. He only came twice. And when he came, he only came to greet the MD and he went away. That's a quality flaw. 2, they didn't employ the right people. 3, he said, oh, why should we even plan? It's a small audit. It's a problem. There wasn't proper monitoring. A junior was monitoring another junior. A trainee was asking another trainee on how to do a complex procedure. Do you get the idea? So material items were being audited by trainees and immaterial items were being done by seniors. So you see this in the scenario, right? What do you see? In questions, you see inexperienced staff, no review, poor supervision, time pressure. Are you getting it? So how do you link it directly? You can say this indicates a failure in engagement, performance, and monitoring under this ISQC 1, right? As work was not adequately supervised or reviewed. So this exam technique, right? Or exam brothel, exam grammar. How do I even call it? So this exam grammar. Do you get it? So you see, in betweens, I always give you the kind of grammar to use because this is the grammar the examiner wants and how you can fish out the answers that they need. So you mentioned that maybe the work was not properly directed, supervised, or reviews. Are you getting it? Maybe you should do what? Hot reviews. And these are recommendations. So the work should be properly directed. It should be properly supervised. It should be reviewed. And review, we have two types of review. We have what we call a cold review and a hot review, right? Now, with a cold review is just after you've done the work, someone has to review. Then we have a hot review, partial on the work. As you are doing the work, we are checking. Do you understand? So be suggesting some of these things as a way to deal with quality control issues. There's quality control on the job. Please, when you go, you can even Google ISQC 1, look at the requirements because they can test those things. I think last 2 dates, yes, this was there. You just have to know what goes into it. And when you look at the examiner's comments, you will see. Let me show you. I don't know whether I have it here. I think I opened it somewhere. It's just where did I even keep it? I'm coming. Hold on. Coming. I think. Where did I put it? Yes, so I think last night they asked something like that. Okay. I'm coming. Let's first read some pointers. Don't mind me, eh? Today is just a recap. I'm just teaching you some simple techniques so that in our next meeting we can do a lot. Look at what the examiner says. He said what? The underlisted points can be used to strengthen the examination. Tuition providers should guide candidates to appreciate the provisions in the international standards on auditing. That's one. More and intensified teaching and learning by tuition centers and candidates should be continued. A lot of mock tasks should be conducted prior to the examination so that candidates will be exposed to the approach of ICA's professional examination questions for improved performance. Candidates must be encouraged to make good use of their study text as well as previous examination questions so that performance in subsequent examinations will continue to improve. Candidates must be encouraged by tuition providers to improve on their English language writing skills. So you realize one thing I was doing. Who realizes one thing I was doing? Who realizes one thing I was doing today?
Yes.
The audit English I was talking about.
Yes. You see, so the examiner himself has identified that this is a problem. So you see, we teach you in class, it's like we just impress the students. People impress the student. Oh, this one, if it comes, do it this way. But they don't actually show you how to do it. Me, the how is more important to me. That's my style. Always, no matter what I teach you the how. Okay. Expressing your thoughts well, I told you, you know the ethical principles, but how to actually put it on paper, that's the problem. And that's what the examiner is saying. The English language writing skill. Because nkofo be brom you good, but who the way on metro no. Do you understand? Good. Now, look at what he said. The weaknesses, right? Candidates have shown strength in areas that regularly feature, like ethics, money laundering, as well as in questions that are straightforward. However, they displayed weakness in the following: ability to relate answers to relevant information, and that's what I am concerned about. Application of relevant standard to answers. A good number of candidates elaborated on answers without considering marks allotted to the question. Majority of candidates did not present the answers in orderly manner. Some answers did not have question and sub-question numbers. Why do you do this? Answers were without paragraphs, visually presenting answers like the way police reports are written. What? Charlie, serious. Oh. So remember I told you. So anytime you see, you explain the technique, right? Identify the threat. Pinpoint a specific situation in the scenario that challenges the professional standard. Explain the why. Describe exactly this is a threat by linking it to the fundamental principles. You remember I was telling you it's a breach of this, that, and naming the specific category of threat. Self-interest, self-review, whatever. I get, even if you don't know the threat's name, don't worry. You can see a threat that you don't know where to put it. Don't worry. Just mention it. You evaluate the significance of the threat. Assess how serious the threat is based on the context. For example, if recurring fees from one client exceed 15% of total practice income, independence is presumed to be impaired. Then you can recommend what? An action or safeguard. Practical scenario specific steps. So some people, they just list safeguards. It's wrong. Link it to the scenario, right? Using separate teams if it's conflict of interest, removing individuals from the audit. Maybe his wife is the MD, or having an independent partner to review the work. Do you understand? So, for example, an audit partner at a firm is offered a bonus by the client's managing director if the audit report is completed within a very short time frame to facilitate a stock market listing. There's a threat there, right? So, identify the threat. The managing director, for instance, is the friend of the partner. He promised a bonus for a quick, favorable audit completion. Why? Iowa. Why? This creates a self-interest trade because the partner has what? A financial incentive to bypass rigorous procedures. It also creates a familiarity trade due to the personal relationship, potentially compromising objectivity and integrity. Did you guys see the style? Did you guys see the style?
Yeah.
Are you sure?
Yes.
You get it? So this is where most students ends, but you must not end there. You must go further. So this threat is highly significant because it involves a direct bribe or inducement and pressure to alter audit results for a listing, which could lead to massive liability if the financial statements are misstated. What is the action? Iowa issue. You saw it. Issue. Why is it an issue? Action. You see, works magic. Can you all see?
Yes, sir.
So why is it a threat? Okay, the threat. Why is it a threat? Then the action. Why is it a threat involves the why itself and its significance. I get and then the action. The firm must refuse the bonus offer. The partner should be removed from the engagement due to the personal conflict, and the firm should communicate the incidents to those charged with governance, possibly the board of directors. Very good answer. Please, do you think if you write this answer, they'll mark you wrong? Please, somebody should give me a yes or no. If you do this in exam, do you think they are going to mark you down?
No, sir.
Why? Why, madam? You said no, sir. So why, madam?
Iowa.
You said?
Because you follow Iowa.
Because you have followed the process in answering their particular question.
And you say you've actually blocked them everywhere. One, you have talked about why it is a threat, what principle it is breaching. Most students just say self-interest. They never talk about the principle. Are you breaching competence? Are you breaching objectivity? Are you breaching integrity? That's what we want to know. Does it make sense? Good. So let's look at the date and what the examiner said. Now, in November 2024, there was a bonus profit, a bonus promise like what we just saw. There's a conflict of interest and undisclosed legal battle. Candidates generally scored high. Some gave generic answers. C. Those who provided detailed, tailored responses attracted full marks. July 2024, question 1A. Ways to enhance professional skepticism awareness in audit staff. That's what came. Performance was satisfactory as the question was practical. However, many candidates confuse audit reports with review reports in Part B. CO. March 2024, there was ethical threat in fertilizer manufacturing audit. So there was familiarity, audit committee attendance issue. So majority attempted well. However, some explained threats without relating them to the case scenarios. You see this thing, we've seen it for some time. Then July 2023, ethical implication of loans and staff secondment to a listed bank. You see staff secondment, we talked about it. Do you remember staff secondment? What threat does it cause? Staff secondment.
Independent.
Pardon? Hey, we learned it here. Oh. Staff secondment.
Objectivity.
No, I said threat.
Self-review.
Threat. No, no, not self-review.
That's confidentiality.
No. See, I told you that when I listed the threat, let's go again. Management threat,
Okay.
advocacy, self-interest, self-review, intimidation, and familiarity. And I said management threat is when you are seen to be acting for management, working in the firm as if you are management. So if I have seconded audit staff to the client, is it not a management threat? Is it not a
Yes.
management threat? We mentioned it
Yes.
here, didn't we? So what
Yes.
happened? What happened?
Forgive us. Forgive us.
No problem. Gradually. Are we okay? Audit is not difficult. You just need to get the concept, get the principles, and do it over and over again. But most of you, once you just learn it today, no, oh, I understand, you never go back there again. Before you see, you are learning another topic. That's why I've given you the key topics. Spend these few weeks Master those ones. The rest, if it comes, you can so. Do you understand what I mean by you can so? But the main ones that have the 10 marks, the 15 marks, the 20s, that's where you build your strength. And those are the areas that I've given you. Does it make sense?
Yes, sir.
Yes, please.
I mentioned self-interest because auditors, they're not supposed to make certain decisions
You
for.
mentioned self-interest. I didn't hear, sorry. Self-interest can also be there, yes. But the main thing there is a management trait. So it's a sub trait there.
Very well. Very well. Thank you.
All right. You're welcome. Now you're getting it. So look at all the dates that these questions came, meaning it's no joke. See where it goes from May 16. You can see. Like
Wow.
December 2022, quality control and ethics. Anytime there's quality control, you see, always look at what the examiner said. I just want you to spot something. Me, I'm not concerned about. Look, Sam explained, look at this. Sam explained what? Threats without relating them to specific case scenario. Can you see? Okay. November 2023. Candidates identified issues well, but a few struggled to provide specific safeguards. That means what are the problems we are seeing? One, people not being able to relate these things to the case. Two, people not being able to provide what? Specific what?
Safeguards.
Safeguards. Yanko, August 2022. Well answered, though some candidates focus too narrowly on just training and development. You see? That means that students don't learn. Professional skepticism is only training and development. Okay. Now, quality control, anytime it comes, people have a problem. December 2022, and even I think November 2025, something like this came. So fairly well attempted, except for a few candidates who displayed a total lack of knowledge of the ISA 220 or the Companies Act. April 2022, Section A was badly answered. Candidate provided factors that constitute a breach instead of factors determining the significance. You see, how significant is the threat? Is it a big one or a small one? But they were talking about what constitutes a breach. Total deviation. Yeah, Maushe. May 2021, performance was not encouraging. Many could not spell out public perceptions arising from the situation. May 2020. This one was ethical issues affecting external auditor in a specific scenario. So, November 2019, friend of engagement partner was acting as a training partner, integrity issues. Candidates were able to appraise the matters and provided required ethical guidance. Not bad. That means people did well. May 2019, gym membership rates for staff and tendering for a competitor. Best answered question. Many identified and evaluated relevant threats and recommended safeguards. Okay. November 2018, question 2A. Safeguards for self-review threats when supervising a client's bookkeeping. Mixed performance. Some candidates strayed into all threats rather than focusing on self-review safeguards. You see, we've also seen another issue. When they bring a question that is specifically tailored to one particular threat, you don't have to talk about all of them. So that's what you're saying. People were diving into other threats which were not important. So May 2018, question 2, a pension investment in client-related company and dating a client's daughter. This question, I remember this one. I've seen it before. I think that was the diet Joseph took the overall best, one of my students. I told him to just focus on the past questions and he took the overall best. So one of the best answered questions, threats and safeguards were correctly identified by many. Good. November 2017, a 15-year-old audit relationship and tax evasion, TV import. There was mixed performance. Familiarity threat was handled well, but recommendations for handling tax evasion were not always appropriate because it's not common to see in cases. Do you understand? So sometimes you must apply your what we call commercial acumen or business knowledge now with your own experience. Now they are true. Mostly, anytime there's a new thing that comes in a scenario, most students don't do well because they haven't seen it before. Okay, yeah. So that is it. So tax consultancy services under contingent arrangement, mixed performance again. Some identified threats correctly, others incorrectly identified advocacy instead of self-review. There was also a 1% share ownership fund, manager conflict, and inheritance of client shares. To a very large extent, candidates identified and commented on issues correctly. Good. May 2016, bank client 20% income and firm performing valuation services. Many identified the threats correctly, but some missed self-review, and incorrectly name advocacy or familiarity. So you see, all the issues are literally the same. November 15, are you getting it? Tax fraud investigation of client and dealing with potentially political exposed persons. Poor performance of tax fraud section. Anytime tax comes, it's like people are scared. Do you understand? So these are some of the questions I put there. How do auditors evaluate self-review threats in specialized industries? What safeguards apply when audit client requests secondment? And explain the significance of the 15 fee dependency rule. So these are specific things you have to master. That's why I've put it in black. Do you understand? Okay. Come here, let me show you. The questions they be break well. This one was November 2025. This one was evaluate professional and ethical considerations. This was last night, right? Fees, 4 marks, and all that. I'm coming. There was a one that the quality control thing came. I'm coming. Which date was that? Was it March? Yeah, it should be March 2025. I'm coming. Yes, I think it's this one. Uh-huh. Look at the examiner's comment. I'm coming. It says what? I and I were not answered well by many candidates. Most candidates were not able to espouse the requirement of the question relative to the ISQMC one. Now let's see what was there. I and I. What did they ask? They said explain to the partners of Bintu and Associate the scope of international standards on quality management and highlight the need to ensure compliance with the standard. Discuss the requirement of ISQM1 about Bintu and Associate risk assessment process. Recommend 2 changes at Bintu and Associates to ensure compliance with the standard on quality management. Do you understand? So that means anytime quality management issues come, people have problems. We even saw it when we're going through what we're going through, right? Good. So quality, make sure that you learn it well because I told you you'll be getting it. So when you see low balling, when you are charging too much low audit fees, it's not that it's wrong. In tax, we completely say it is wrong when you are dealing with tax. But in audit, it is allowed, but you must not compromise your quality. If I'm supposed to charge 10,000 for an audit and I'm charging you 2,000, the same work I'll do when I charge you 10,000 is the same work I should do when I charge you the 2,000, right? Contingent fees there, it is what? It is prohibited. Why? Because it creates self-interest and intimidation. What do we mean by contingent fees? When I'm charging based on some performance, like percentage of profit, or I'm charging a percentage of your what? Revenue. Are you getting it? Does that make sense?
Yes, sir.
Okay, good. You see, so what we were doing is better than solving question. Anna, because I can solve a question now. That means most of the things you didn't understand, you would have kept it and you just be shaking your head. Do you understand? Yes, sir. Anyway, so the next thing is audit tendering. Tendering is also part of your professional issues, right? So tendering is just your resume or your CV, or you are pitching the audit firm, right? So usually when you receive an audit contract, you need to tender. So mostly in exam, they'll just ask you the things to include in the tender document. All right. So your firm background and size, industry expertise, your audit methodology, quality control, your key staff, timelines, your fees, and non-audit services you provide. Right. It's like your CV. What goes into your CV, your experience, what you know, all those things is the same. Are you getting it? So things like if you are issuing a tender, never criticize other auditors. Don't make guarantees. Don't use unprofessional language, just like in audit adverts, right? Same. So the same rules, are you getting when it comes to adverts? Same rules happen there as well. Auditors don't advertise in the normal media. So when you see somebody advertising in the media, that alone is an ethical issue. Okay. So let's say when it comes to advertising, the key rules are don't use misleading claims. We are the best auditors in town. We have done this, unsubstantiated claims. What shows? Don't compare yourself with others. We can give you the best advice, not like audit firm A and B. come to maybe Billy and Associate ICAG. No, that's wrong. Come and we'll give you the advice you want for a small fee. It's what? Objectivity issue. Why would you give me the advice I want? That means if I pay you something small, you can do what I want. Do you understand? So these are the issues under professional issues when it comes to practice management. So usually never list the safeguards randomly. IWA, the actions, right? So when it's a self-review trade, sometimes you can use separate teams. You can do hot review, right? The why you are doing it. Most students don't even tell us why you are applying that action. We should use separate teams because we should conduct a hot review because the client is of a higher risk. We need expert valuation because there are actuarial issues and we require valuation of maybe PPE. Are you getting it? Or valuation of your pension. Do you understand? We should inform those charged with governance because this is an intimidation threat coming from management and the board must know. We should decline or resign because there are no other safeguards available. We should what? Go and get legal advice because of this. You see, I told you it's always because of the because factor. If you can't tell us that, forget your marks. Are we okay? So most of the time, when it comes to engagement acceptance, it's a very common question that they add to quality questions and we usually can come under planning or can come under ethics. So answer as a decision question. So if you're accepting an engagement, mostly we check whether the preconditions for an audit is there, right? We'll come and talk about all that. So you must have a checklist. Do you have the resources and competence to take up the audit? Are you independent? You have to check the integrity of the client, anti-money laundering clearance, fees and commercial viability. Are you getting the reputation and risk and the preconditions for an audit that I was telling you about, right? So you conclude clearly. The examiner loves conclusions. I told you earlier, always your conclusions also count. So for your answers to stand out from the rest. Okay, so given the significant ethical and professional risk identified, the firm should not accept the engagement. Are we okay? So end every section with therefore, because the examiner loves conclusions. So we have concluded on the ethical and professional issues in the exam. So in simple summary, what we did was this. I told you ethical issues. We have what? Integrity of client. When the client is seen to be restricting us, hiding from us, or breaking the law. Conflict of interest. You are dealing with two competitors. Software recommendations, confidentiality. We saw it. Risk to the auditor's independence and the breach of the professional issues, right? The professional fundamental characteristics. Then we came to professional issues, money laundering. We came to auditor liability, then practice management, which includes quality, tendering, advertising, and then finally the impact on the audit work. We'll come and do that in detail when we are solving questions, right? When it has sense there. Then the what? The safeguards, right? So I told you to always use the framework IWA. The issue, why is it an issue? What is the action that can be taken? And that's the safeguards. So this week to the end of the week, what you can do is take the past questions. Every diet ethics comes, go through the question, go through the solution. Try to see how I see applied my technique and add yours to it. That is how we learn. Before you see, there's no ethics question that can beat you. That's it. All right. So that was it for the section. I know I didn't, media, I'm not good at teaching auditor. So I'm now learning small. All right. So that was the end of our session today. If you have any question, you can ask.
So I want you to touch on the stages of money laundering, the placement and then the layering.
Okay, so placement is when it is placed into the financial system. All right. Then layering is when you create a layer of transactions, moving from one bank account to the other in simple terms. And integration is when you do legit business now. So most people will put into high-end cash-based business like betting companies, right? So it goes through the betting company or a filling station. Then you see that money will be moving fast, then it will become a legit money. It has been integrated into the economic system. Does that make sense?
Okay.
Good. All right.
Hello, sir.
Yes, please.
Please, do you have days that we meet for this section?
Yes, I think on the timetable, please, those who know on the timetable, I think audit is, let me check.
Wednesdays and Friday.
Is when?
Wednesdays and Friday.
Is today Wednesday?
Yes, please.
Okay, so it should be Wednesdays,
Thank you.
Fridays. Yeah. All right.
Yeah,
So
thank you, sir.
you are welcome. But how was today's session?
It's nice. I joined very late because I didn't see the notification early. I didn't put on my data. So I joined around 5:30 there, but the
Oh,
one
okay.
I enjoyed was good.
That's fine.
Thank you.
Okay, that's fine. All right. So that was it for today's session. I think in our next session, we'll take about 3 or 4 different ethical and professional issue questions. We'll take one which is this ethical question, take one which is ethical and professional issues, take quality control, full quality control question, and take one which is maybe miscellaneous around the other areas of ethics we talked about. And I can say that proudly, my guys are solid when it comes to ethical and professional issues. From there, the next thing we'll look at will be audit risk questions. You can see risk also has its rules. We must understand. You see, risk, I'll teach you all the aspects of risk, including when it comes to groups, how you do it, like testing controls, reviewing group instructions, acquisitions, existing subsidiaries. Then we'll come and look at audit reporting questions. Are you getting it? And all the audit standards that you need to know. You see, all the audit standards, there are some things you need to know, right? When you get it, Charlie, audit and Jalbeji award. So that's it. All right. Have a nice and beautiful day.
Thank you, sir.
You're welcome.
Thank you so much.
All right.